What is going on, investors? Hopefully you guys are having a great day out there. Time to talk about Microsoft Corporation, ticker symbol MSFT. This stock is down in the after hours by about 3%. And boy, that gets me excited because this one could potentially pulling into an area where you could accumulate shares of a mega cap company at a discount. We'll talk about, is this a buying opportunity with Microsoft after shares slide after inline Azure growth offsets strongest revenue since 2018. So the street was upset when you come here and look at Azure growth, which is their like cloud-based business that grew at only 50% over the last year and 46% based on constant currency. You see the other growth aspects. You got Xbox content and services growing 34%. You got LinkedIn growing at 25%. Put that in your pipe and smoke it, Facebook. And you got 26% growth on the server side as well. Look, everything looking strong from a growth perspective. And so that's what I like to see when we've got these mega cap companies and they disappoint on kind of like this quarterly basis thing and investors get kind of upset. That actually gets me really excited. Now, we've got to dig a little bit deeper. So we're going to take a look at the income statement, the balance sheet, cash flows, and stuff like that, see what's going on with Microsoft. We'll start things off with revenue here, and we've got our product and we've got our service revenue. We earned $16.9 billion on that product side. We were at 15.9 in the previous period. Service came in at 25, we'll call that 25, and we were basically at 19 and some change in the previous period. So you had nice strong growth on this total revenue. Again, this is the strongest revenue that they've had in several years. You went from 35 up to $41.7 billion. Now, boy, I tell you why I love Microsoft. And when it pulls back, the first thought is, I want to buy more of this. And the reason why is you look at these revenues, this gross margin. So we've got our product here. We've got $42.3 billion that we spent to make $16.9 billion. This is a company that's been around forever, basically. And to have these types of margins after all the competition that could have came into this space, after all the businesses that they're in, to have these types of margin is just absolutely phenomenal. On the service side, really nice margins there as well. You got $8.8 billion to make. Call that about $24.9 billion. Okay, our total cost of revenue, again, I told you they made $41.7 billion. We only spent $13.045 billion to make it. That is fantastic. That gives you this gross profit of $28.7 billion. In the previous period, we were at 24. So you bolted on about $4.6 billion on the gross profit side just over the last year. Now, we do have R&D costs, we have selling and marketing cost, and we have G&A cost, okay? Those came in at $17.48 billion, and in the previous period, you were basically at $13 billion. So we've got to pay some taxes, we've got to pay some other expenses. That gets us down to a net income here of $15.5 billion. So our total revenue was $41 billion. We spent $13 billion to earn that. We spent some other expenses here. It looks like about 12, maybe 11 and some change. That gives us net income of $15.5 billion. In the previous period, a year ago, we were at 10.75. And so you bolted on nearly $5 billion in the last year on Microsoft's net income. And you see here, they're also executing a buyback. They went from 7,675 down to about, we'll call that 7 at 6. So they're reducing the number of shares, and that is bullish for you as a shareholder as well. Let's take a look at the balance sheet. Let's see what's going on here. We've got June of 2020 to March, so it looks like maybe a 9-month view here. We've got our assets up here. We've got our cash and cash equivalents right here, coming in at $13.7 billion, up slightly from where we were. We're down on these short-term investments, so they've burned through some cash. Question is what they use it on, maybe some acquisitions. I know Microsoft's been active in that sense. I don't think the one that they just recently closed has gone through yet, and so you probably haven't recognized that on the balance sheet yet. But this is a company that has plenty of cash and you'd like to see them use it. And so that will be exciting for shareholders as we move forward. Now, total assets came in at 308, basically, just up slightly from, about 9 months ago or so. On the liability side, we've actually reduced our total liability side. We have long-term debt went from 59 down to 50. So it looks like they've paid off a little bit of that debt. They've got this current portion of long-term debt. Some of it is rolled over to the current position, but all things being considered, things are looking really strong from the balance sheet perspective, as I'm sure you'd realize. Now, here's where things get a little bit more interesting with Microsoft, because we pull down this fantastic net income number of $15.5 billion. You see in the previous period, we were at 10.7. Now, for the 9 months, we pulled down a $44.8 billion net income. That is not over, but close to $11 billion more than we were a year ago for a 9-month period. We get to add back in things like depreciation. We get to add back in things like stock-based compensation, although you got to pay your employees some way, whether it's stock or money or both. This is something that is probably somewhat controversial in terms of cash flows. But look, since we're using it for all of this and every company does this, it is something that you can do and kind of factor in to your analysis if you want to. Income taxes, things like that, they add back in a lot of stuff here. We came in at our net cash from operations at just $22.18 billion. Boy, that is fantastic. And we were at $17.5 billion in the previous period. For the 9 months, we've got $54 billion of cash coming in from the operations. You were at $42 billion from the previous period. So what are they spending this cash on? Because we talked about on the balance sheet, they actually burned through a fair amount of cash. Looks like about $11 billion. So what they use that cash on? So you come down here to financing, and then you see here for the most recent quarter, net cash used in financing, they actually burned through about $13 billion. Well, what'd they do? Common stock repurchased right here, about $7 billion. Cash dividends paid, about $4 billion. So add this number up. This is close to $11 billion. In fact, it's smack dab on the nose. They used a lot of their cash for stock repurchases and dividends. You see here that this is a company that made $22 billion in the quarter, and they either bought back or paid a dividend on almost $11 billion. So they're using almost half of their cash to pay dividends or rebuy the stock. And some of you might out there be saying, well, I wish they'd buy this company or wish they would go and reinvest in their business more. Here's the problem for that with Microsoft and Google and Facebook and Apple. These companies have regulators not only here in the United States, but across the world, just right on top of them. Okay. It is very difficult for companies like this to execute mergers and acquisitions. I think if that environment was a little bit looser, you would see Microsoft using more of this cash instead of maybe rebuying the stock. I think they'd pay a nice dividend, but instead of spending $7 billion in a quarter on buying the stock back, well, look, they'd probably buy some other companies out there. They'd roll up some technology, but they can't do it. Okay, it doesn't matter if it's a Democrat or a Republican here in the United States, and it doesn't matter if it's in the United States or it's in the Europe or across the world. Regulators are just simply not allowing these companies to execute acquisitions and things like that. Now, we see here from the net cash from operations for the 9 months, we earned $54 billion in positive cash flow. Stock repurchases came in at $12 billion. Dividends came in at $12 billion. Stock repurchase came in at $20 billion. That's $32 billion over the last month going in for stock repurchases and dividend. And again, we earned $54 billion. So more than half of the money is going to those uses. So just phenomenal in my opinion, because again, they don't have a lot of other uses for the cash over at Microsoft. If this company was smaller, if the regulatory environment was different, I think they'd be using the cash different. But in the times that we're in my opinion, this is the best use of the cash. And for you, the shareholder, probably a good thing, in my opinion, in the long run. Now, this thing is pulling back. I'm going to put a line here where the stock is trading right about now. We're sitting right here at $252 per share. Earlier in the day, we were up here at $262. So this thing's peeled off about $10 off the stock price. Here's what I'm noticing. I'm going to zoom in on here a little bit. Here's what I notice on this stock chart. We've got very, very sparse candles here, okay? You've got some gaps here. This was only 1, 2, 3, 4, 5, basically 5 trading days. We went from 244 on this one up to 256. So they bolted on about $12 per share on this one over just a handful of days. When you have this type of spark action on the stock, this is like a rock skipping over water, okay? It skipped a bunch of levels, whereas a boat would just kind of cruise over it. So when we pull back on this one, I would anticipate these gaps filling in. I would anticipate us coming down here to 249, 250, potentially all the way back to this area right here, right around $245. It's about $6 or $7 where the stock is. Again, this is what I kind of hope for. Whether or not it happens, whether or not the conference call can reverse this, whether or not the sentiment in the market can kind of reverse this stock, and it can kind of make a quick U-turn and get back up into this upper channel up above 256. So that's what you're kind of looking for with Microsoft. You can pull back and kind of fill this gap in here and get back, in my opinion, at least to the 250 range. The 250 range, which is only $2 where the stock is right now. I wouldn't pinch pennies necessarily, especially if you got a long-term view on this one. But if you're buying lots of shares, saving a couple dollars per share is, something that you should probably attempt to do. Certainly options trading and things like that, you got to pay very, very close attention to the price that you're executing on this stock. But a pullback, in my opinion, all the way back to 245 would be an absolute must buy. You've got some support here. That's where this most recent kind of launch of this stock kind of started. And then you've got some areas under here between 229 up to about 240 where there should be significant support for this stock, because you've got all these candles. These are all people. These are all buyers and sellers of the stock. You should have some people step in this area. So I wouldn't have no problem stepping in here at 245. I probably wouldn't have a problem stepping in here at 250 either, which again is only about $2 where the stock is. Now, on the way back up, we should see some resistance back at 255. Okay, that's where the stock kind of broke down, and there some sellers should step in at 255. We break above 255 and you're back up to the races, up to 260, 264 on this one. So Microsoft selling off in the after hours, likely kind of short-sighted in my opinion. Azure grew at 50%. I just did a video on Google. They grew at a similar kind of clip in their Google Cloud. Look, cloud businesses are just not, 50% growth is just phenomenal. So I don't want to say that they're not going to grow at impressive rates, but when you have Amazon, Google, and Microsoft, among others, there's dozens and dozens of other competitors in this space as well, but Google, Amazon, and Microsoft are fighting for the big dollars, okay? There's just not going to be that much room to grow, okay? 50% growth is phenomenal. I think the days of 100% growth on these types of businesses are probably behind all these companies, okay? Because if they print that type of number, the stock would just go crazy. The street has got to get a little bit more comfortable with softer revenue growth from these cloud businesses, because there's just more competition out there and you just have mega caps competing for this business. Overall, though, Microsoft has a wide diversity of businesses. They are able to execute some acquisitions, unlike Google and maybe Facebook, who have a much narrower business. Microsoft is much more broad, so they can do some acquisitions in the video game space. They can do some acquisitions like a LinkedIn. Okay, they attempted to buy TikTok. They can maneuver a little bit more than some of these other companies. So I like Microsoft from that sense. You also get this dividend where the yield is pretty light on a company like this. But if you're holding the shares for a long period of time, that is money that will pile up in the long run. So that was Microsoft. Hopefully you guys enjoyed this video. Be back with lots more. Good luck with your investments.